Hi everyone, Katrina here, and I am here doing another Laugh Loves Local, and today we're talking with Robin, who is with the Mortgage Group. Now, Robin just did a mortgage for one of my clients, and Robin, I gotta tell you, you were absolutely amazing with this client. Thank you so much. Robin, you've been doing mortgages for 23 years?
23 years.
23 years. Yeah. You must have seen, and where did you start?
I started with one of the major banks.
Okay.
And I had about a 20-year tenure with the bank.
Wow.
The later part of my tenure with the bank, they put me into mortgages. Actually, they threw me into mortgages. And I was terrified. I'd never done a mortgage before in my life.
And they put you into mortgages?
They put me into mortgages because I was with a seasoned manager who had done mortgages.
Wow.
So they thought that we would complement each other.
Right.
And my very first mortgage was a client that came in and wanted to pick up their house and move it to another lot.
Oh.
I'm like, pardon? I had no idea.
Yeah.
Anyways, we got it done. It took me a while. We got it done. I thought, I'm never doing this again. Yeah. And then I fell in love with mortgages.
And now, 23 years later.
23 years. I left
the bank
and I started mortgage brokering in the year 2000.
Wow.
And
so you've come through a lot of different changes.
Huge changes.
Within mortgages over that time period.
Yeah.
So let me ask you, Robin, we're now we're embarking on 2024, we're ending 2023. And what do you see coming down the pipe for 2024?
Oh, it's going to be a tough year.
Mm-hmm.
People have to come to the realization they're not going to see 2% anymore.
Mm-hmm.
There's a lot of people coming up for renewal, and they're going to have a payment shock. So it's my job to guide them through it and to try and get them into a mortgage that is comfortable for them. We don't want to see anyone lose their homes. The lenders don't either. The lenders want these clients to stay, and we know it's just a critical period right now. These clients don't have to requalify when they're coming up for renewal.
People don't necessarily know that.
They'll get a renewal notice in the mail from their lender, sign here, zip, and you're done. Well, that might not be the best scenario for these clients. They may think it is because they don't have to requalify, but what if we could extend your amortization to make that payment a little lower, to make it lower to what you're kind of used to, what your cash flow with the family. So there's opportunities out there for them. They don't have to be shy. They can just call. It's just like doing a financial checkup, right? We all do a financial checkup of our investments every year, so why not your mortgage?
That makes a lot of sense.
Yeah.
You do a balance of refinancing and new
purchases.
Is that correct?
That's correct.
Is it 50-50, 60-40?
I'd say I do more 60-40, 60 versus being refinances and renewals.
Okay.
40 being purchases. And all those purchases are not necessarily first-time home buyers. They're previous clients that are moving up or moving down or moving out, and they've used my services in the past.
So they might be porting their mortgage, or they might be, So they may not be first-time home buyers, but they are still new purchases because they're either upsizing or downsizing. And how do you manage through all of that? And how do you what do you think from a first-time home buyer's perspective? What do you guide people? What do you say to them? What are the things that they need to look for in terms of preparing for being a homeowner?
That's tricky. Every first-time home buyer is totally different. So it's all going to come down to your credit rating and your income and your down payment. But for someone brand new that has absolutely no idea, I go through the basics with them. And if they say to me, I'm thinking maybe next year of buying. So we'll go through a scenario and I'll say, okay, this is roughly what your payment's going to be on that type of a mortgage. I'd like you to put that money aside for the next 6 months, and let's see how your cash flow is. Then you tell me if you can handle that. Now, that's if your ratios work. Like we've got all these guidelines that we have to follow, but some people don't take into account their lifestyle. They know they can afford the mortgage payment, but what about the theater they want to go to once a month, or the dinner out, or their activities, or whatever. They don't take that into account, and that's not taken into account when qualifying for a mortgage either.
I understand that completely, and I tell everyone that you might qualify for X dollars, but that doesn't mean that you want to spend that.
That's correct.
So you might qualify here. I'm always looking to kind of, let's not be house poor.
Yeah.
And we need to still have date nights, and we still need to enjoy ourselves and have a lifestyle. So you're setting them up in advance.
I like to set them up because it's not just the mortgage payment.
Yeah.
There's property taxes, there's heat, there's hydro, there's your cable, there's your cell phone bill, there's everything else that you still have that you're going to have even more of.
Right.
So let's see how you can manage. And often, mom and dad are coming into the picture, right? It's the bank of mom and dad helping with the down payment because these kids just haven't been able to save that kind of money.
One of the things that I have experienced personally with working specifically with you recently was your commitment to customer service and really truly putting the client first.
Absolutely.
And you don't just work a Monday to Friday 9 to 5.
Absolutely not. As a matter of fact, my evenings are usually busier than my daytime,
right.
Because that's when people are home from work,
right.
and the kids are in bed and bathed and school work done, and then they can sit and they can have a conversation. And usually they'll both get on the phone. Husband and wife will get on the phone, or we'll do a Zoom call, it's probably 8 o'clock at night, but that's when they can really concentrate. And so my time is flexible to my clients. Absolutely it is.
That makes a lot of sense. You meet them where they're at, essentially.
Yep.
Yeah.
I do, definitely. Now, since COVID, there's a lot less in-person meetings, but the technology is there now for Zoom. So, if someone wants to talk or meet at 8 o'clock at night, we can hop on a Zoom call. I'm not driving from my home to their home or to an office at 8 o'clock at night.
So you work out of your home?
I do work out of my home.
Which gives you the freedom and the flexibility to have these conversations at times where it's
Absolutely.
Convenient for them to have it.
Yes. Yeah,
right.
Absolutely.
You don't need to go to a specific office to actually have a conversation with them.
Because that all takes time as well, right?
For sure.
Your traveling time, just all takes time. So it's much easier to just hop on a phone call or a Zoom call.
So Robin, you say that when you first started with mortgages, you really didn't like it.
No.
And now you love it.
Well, it's fear of the unknown.
Right.
Right? I didn't know what I was doing.
Yes.
So when you're not comfortable with what you're doing, like in your own skin, it's hard to help someone else.
For sure.
And to come across like you're supposed to know what you're doing. So
now that you've come into your own, you know exactly what you're doing, you can guide everyone through, which is an important aspect of being a mortgage broker. Yeah. You need to be able to be 5 steps ahead of them and walking them through everything, and which is why you love the mortgage. But what is it about being a mortgage broker that you really love? What's your secret sauce?
The flexibility, being able to offer them many different options, not one lender, not one product, different interest rates, different terms. Let's see what your goals are, right? Let's match the mortgage to what your future plans are.
That makes a lot of sense.
Right? Let's not put you in a 5-year mortgage if you're going to tell me you're going to be transferred in 3 years to BC, or this is a stepping stone home and you're not staying here in 3 years. So
And is it true that you're not really encouraging the 5-year fixed right now? You're more...
once again, it depends on my client.
Yeah.
There's some clients that are steadfast with a 5-year. They're not moving. This is it. This is what they've always had. This is what mom and dad always had. And there's no talking them out of it, nor should I. It's my job to give them their options.
It's funny because we're telling people these days to kind of rent the rate, or date the rate, marry the home and date the rate.
Yeah. Yeah.
So find a home that you love. We know that rates are
hopefully coming down.
Correct. And so find the house, marry the house, date the rate.
Yeah.
So instead of doing a 5-year fixed, you
do a 3-year.
Right.
Yeah. Absolutely. There's a lot of, especially our first-time home buyers.
Yes.
They need to be in 3 to 5 years.
Right.
And they need to know what their payment is going to be for that length of time.
Right.
I would never put a first-time home buyer who's not seasoned in a variable.
Right.
It's just up and down the market, and you have no idea what, like, none of us saw this coming. None of us saw these increases coming. From March 2022 to now, it's gone up like, I don't know how many percent, but you know, there was a time when the Bank of Canada benchmark, which was 5 1/4, was way more than what the client's current interest rate, what their contract rate was.
Yes.
So they felt comfortable doing a variable. I said, you know, I've qualified you at the benchmark. Your rate's 2.5%. If the rates go to 5 1/4, I'm saying you can still qualify. Well, those poor people, their rates are now at 6. So it's hard. Nobody can see what can happen with the economy. We've never seen this in 20 years. But those people I've been in touch with, they have the choice to lock in. If they're in a variable rate, you can lock into a fixed term at any time, as long as you stay with the same lender. So,
well, there's certainly lots of excitement happening around mortgages these days.
I'll say, yeah, I know.
Yeah, and part of what you bring to the table is 23 years of experience of walking them through some uncertain times. So you've got the experience to back you through so that you can, like I said, see 5 steps ahead.
Yeah.
Yeah.
Yeah. And to have a first-time home buyer, like, they're a lifer. If you treat them right and you let them know you're there for them post the transaction,
right,
they can call at any time. They know I pick up the phone. They're not getting my voicemail.
Right.
And if they do, it's because I am on a call, but I will call them right back.
Right.
And they know that.
For sure.
You know, I had a client not too long ago that said, Robin, I didn't hear back from you. I phoned you and I never heard back. And I said, I didn't get your phone call. And their answer to me was, I figured that because you always return my calls.
Right.
So it's important. I know customer service is important everywhere in the industry, but it's definitely important, top for me.
For sure. All right. Well, Robin, thank you so much for coming out and having a conversation, especially these days, about mortgages and with all of the, and you know, it's all about the misinformation that's out there too. You know, there's so much fear mongering and there's so much ideas of that. We always go, it's natural to go into worst case scenarios, but it's not about worst case scenarios at all. In fact,
no, it's not.
We're looking forward, and we have an idea of where it's going to end up, and we're listening to our economists, and we need to be able to guide everyone so that they're not thinking, oh, the sky is falling. The sky is actually not falling.
No, it's not. I mean, we don't have a crystal ball. None of us do.
For sure.
But you're right. We listen to the economists. We get the papers. We get all the readings that come through from the financial industry. We get them daily. We read through them. And every indication is rates will start to steady and come back down. We've already seen just this past week a small decrease in some of our fixed rate terms.
So you've got the finger on the pulse of what's happening on a day-to-day basis.
Yes. You have to.
Yeah.
Because if a client calls, you've got to be able to help them.
For sure.
Right? You've got to guide them in the right way. And there's many that call because they're in a variable or they're afraid or they're not sure what's going on. And so you just settle them down and take a good look at their financial picture with them and reassure them they're going to survive. Like the rest of us, we'll all survive. Yeah.
Well, Robin, thank you so much for coming out and having a conversation with us and hopefully putting people at ease about mortgages and where they are, and with your 23 years experience, particularly as a mortgage broker, but also the 20 years experience in the banking section before you became a broker yourself, you certainly have the wealth of information to be able to guide everyone through.
I certainly hope so, and I think most of my clients are happy.
Yeah.
Well,
thank you very
Katrina.
much. All right. Take care.
Thank you.